Hey everybody, this is Halstead and Andrew McMillan with REH CPA. Today we want to talk about the differences between a tax credit and a tax deduction. There's a really big difference between the two, and you guys need to understand it. I've got Andrew McMillan here with me today. Andrew, what can you tell us the difference between a tax credit and a tax deduction?
So a lot of people think we're talking about the same thing when you're talking about tax credits and tax deductions, but essentially they both reduce your overall tax liability, the overall amount of tax that you're going to pay. Both a tax credit and a tax deduction reduces that, but they reduce it in different ways. So first, a tax deduction, what it does is it really just reduces your income that's going to be subject to tax. So let's say you make $50,000 of taxable income and you qualify for a $5,000 tax deduction. So instead of being taxed on $50,000, where you're only going to be taxed on $45,000 now. So let's say, using that same example, let's say you make 50 grand, you got to pay taxes on it, and you're in a 20% tax bracket. So you're going to pay $10,000 in tax. Well, if you have a $5,000 tax deduction, that $5,000 tax deduction is going to save you $1,000 in tax. So 5,000 times 20% is going to save you $1,000 in tax. So instead of owing 10 grand, now you're going to owe $9,000. So it's important to understand that like a tax deduction just reduces your the tax your income that you're going to be taxed on. So tax credits are completely different. Tax credits are generally better than deductions because they're a dollar for dollar reduction in your taxes that you're going to pay. So kind of using that same example, if you make 50 grand, you owe $10,000 in tax. Let's say you have a $5,000 tax credit. It's going to reduce that $10,000 in tax down to $5,000. So it's a great way to reduce your the tax liability that you have. But there is a key difference between the two. So you want to make sure you're getting all your deductions, but you also want to make sure you're getting all your credits.
Yeah, I deal with this a lot whenever I'm talking to clients about charitable contributions.
Yeah.
A lot of times they think it's a dollar for dollar. They're like, well, if I donate, $10,000 to the church, then it should lower my tax liability by $10,000. It doesn't, because it's a deduction, not a credit. And I generally tell people, I'm sure you do too, whenever it's a deduction, you think about 25%.
Yeah.
So if you donate $10,000 to a charitable organization, then you're looking at about a $2,500 reduction in tax, about 25%, which almost covers most people's Fed and state. But then a tax credit, now that's the good stuff. That's the stuff that's going to reduce you dollar for dollar. You get a $5,000 tax credit, it's $5,000 off your taxes. So awesome. A really good explanation, Andrew. If you guys out there have any questions about how to maximize tax deductions or tax credits or the impact on your tax return, feel free to give us a call and we'll help you out. Thanks.